And welcome to the Dakota Housing Network with Joe Sheehan.
Hey, Flohr.
And in absentia, Greg Larson.
Yep. He's in somewhere.
He's always somewhere.
We shouldn't say where he's at.
He might
want.
Yeah. Track him down. He is kind of a celebrity. You go anywhere. Greg knows everybody.
Yeah. Then running the board is always Jim Walsh.
Hello.
Chairman of the board, as Greg likes to call him.
Yep.
Hip, hip. Jolly what?
And so, all right, everybody, we gotta get in the saddle and get running because we got a big day here on the Dakota Housing Network.
We have a guest in the studio.
We have the highest year-over-year increase in rates in 4 years.
Ooh.
So we're going to talk about that. We've got retired Captain Grant Bouley, part of the mortgage guys at Benchmark Mortgage, and he's going to talk about VA home loans, and I can't wait for him to share his experience between what it was like for him to get a home loan versus what he thinks veterans deserve in the home loan process with VA home loans.
And who better to talk about that than a veteran?
That's exactly
VA loans.
That's
You can't beat
exactly
that.
right. Someone who does them, that's also earned them. So, well, let's get to the interest rate conversation, then we'll bring Grant on the air. But the primary mortgage market survey says
kick me in the butt, Joe.
4.65% on 30-year fixed rate mortgage.
Oh, that hurts.
Up for the fourth week in a row. 15 fixed rate mortgage at 4.11%, and the 5-1 arm at 3.92%. Of course, this has some varying points and fees with each of these rates.
Say it isn't so, Joe.
Is it over?
You can't say it's just, you can't say it's over.
No, it's a fact. Yeah. No, they're up, folks, but there's always bad news on the horizon. Don't get excited yet. Still, 4.65% on an average 30-year fixed rate mortgage isn't.
That's not
awful.
bad.
No.
Went up a tick, though, in the last couple of days.
You know what? But all you have to do to feel a little better is just go ahead and look at your 401k.
There you go.
So what's going on? Let's go to the mortgage market guide. Bill Bodner, our good friend, says, keep locking them, baby. If you lock them, if you got them. Bonds are lower and yields are higher again thanks to more of the same, higher stocks and rising global yields. The sell-off, which started almost 1 month ago, continues. Stocks are getting a boost and hit an all-time high on news that China may be reducing its average tariffs on trading partners, and this in a measure to lower costs for Chinese consumers. Clearly, there is pressure on China to come back to the table and come to a resolution with the U.S., but they are not there yet. The stock market thinks it will get it figured out.
Does Mr. Trump, is he right then? Was he right to do this tariff thing?
No. All I know,
there's pressure on the Chinese to, God, come on, guys.
All I know is I never believed in fake news until I saw all the video of the weather forecasters now who are pretending to be blown away. Who were
yeah.
I was just like
one guy walking right behind him.
Yeah, and then there's the guy with the leaf blower on the side.
Yeah,
you know, and I mean. And I was like, if you'll lie about the weather, what else will you lie about?
I mean, I don't. Using a leaf blower during a hurricane.
All I know is for sure, there is one place in the world where there is truth being broadcast that's not fake news. It's 11 o'clock on Thursdays here on the Dakota Housing Network.
So anyway, what else did Bill say?
Weekly initial jobless claims are at a record low, seen in the late 1960s, highlighting the tight labor market. Read, expect more wage gains in the next jobs report. The Philly Fed Manufacturing Index easily beat expectations. Existing home sales will be released today at 10. Ooh, they just came out. Mortgage rates have climbed to their highest level since April 2011 to 4.8%, to 4.88% in the latest week. Actually, we just reported 4.65, but they might be using a different source.
I think they went up the last couple days.
And reports the MBA, a strong economy and a tight labor market continuing to push rates higher. As we wrote yesterday in talking with clients, there are fundamental strong economic news, rising wages and rising global yields, and technical charts, headwinds to rates improving much from here. So basically, folks, you got a great market. You got the Chinese getting pressure on them. All of this resulting in the idea that rates are going to get better? Probably not. So you should still consider locking until we see more stabilization. And when you look at the bond charts, of course, what we see is that interest rates have really kind of been, or bonds have been tumbling, causing interest rates to go up now for literally a couple of weeks. And so, lock them if you got them. Hopefully you're working with a loan officer who understands what affects interest rates and where they're going. But yeah, really, we haven't seen, interest rates have gotten worse since August 24th. The bonds have been on a decline.
Roughly a month.
And rates have been on the increase. Anything? Do you have anything from you? You know, you pay attention to Mr. Habib a little bit, and has he got any different take on it?
He's just like Bill. But I got one for you here.
Yes, sir.
I came across this in my, keep articles that I come across for the show here, and that I came across this one, and for some reason I hadn't deleted. This is from the Wall Street Journal, July 13th, 2016. Why ultra-low interest rates are here to stay. I based my whole life on this, Joe, back in 2016. But I should have looked closer. They didn't say how long those ultra-low interest rates were going to... They said they're here to stay. I figured, well, there we go.
There we go.
They're here forever. They weren't here forever.
You went inside your doctor, found out how long you were going to live, and then there you were.
And now I figured I was going to stick with this, and no.
Although Bill Bodner, still safe on his projection, that interest rates would stay below 5%. I'm reporting 4.88 now.
He's getting close.
They would stay below 5% on average, though.
On average.
Till
2020.
Through 2020.
Until 2020.
Yep,
so
until 2020.
He's got a year to go.
Yeah. So it's so I mean we do have but
we need to make in Bill's defense, he made that prediction in 2011.
And he did.
That was before the Wall Street Journal said ultra-low interest rates are here to stay. I should have listened to Bill.
August existing home sales, 5.34, unchanged from July, just below the 5.36. Okay, now, one thing people don't necessarily know, I think this is a great time to bring Grant Bouley onto the show because a lot of people don't know that interest rates can be different on VA loans. Grant, say hi to the people.
How you doing? Yeah, thanks for having me, Joe and Dave. I appreciate being on the show and talking about VA loans and right now VA rates.
So tell us a little bit. You did some looking at interest rates, and of course we don't have disclosures to put the actual rates on the air, but what did you learn about VA rates this morning when you priced them out?
So taking a look at them in the last 24 hours, I'd say VA rates are anywhere from an eighth to a quarter point better than they are on the conventional side. And taking a look, especially at that Freddie Mac survey being up a little bit in the last week and up over the last year, I'd say VA rates are trending right alongside, parallel to those conventional loan rates.
And North Dakota Housing VA rates with the START program,
4.5, yeah.
Yep. So, all right. Well, we got 1 minute. We're going to go to the break. We're going to be back with Grant Bouley. He's a retired captain from the U.S. Army. He is the only person I know of in North Dakota who does VA home loans, who's also earned one. So we'll be back with his perspective on the VA home loan process and how veterans are served through that program after the break here.
And Jim's playing rainy day songs today. So
Here comes it.
Here comes that rainy day feeling again.
Currently, it's 47.
Here's Sean Hannity, weekday afternoons on SuperTalk 1270.
And welcome back to the Dakota Housing Network with Joe Sheehan from the Mortgage Guys.
Dave Flohr.
Mr. Housing.
And Fool in the Rain by Led Zeppelin. That's us.
You know, so the theme today, rain is coming down, rates are going up.
There we go.
Okay. A slight alliteration for you there.
There you go.
Hey, we got Grant Bouley here, guest on. And Grant, one of the things that I know you talk about a lot and you talk about with customers is, like I said, I don't know anybody else in the state who is originating VA home loans who's also earned one. Talk a little bit about your experience in getting, because I knew you've had at least one, if not two, where you've gone through the VA home loan process. Talk about that a little bit and tell us what it's like for you as a veteran getting your home loans.
Yeah, absolutely. So you asked me to come in and talk my story. About a year and a half ago, getting ready to separate out of the military, coming up on my 10-year mark. I have a wife, I have a 2-year-old, I have a dog. We're living down in Louisiana, getting ready to move up to North Dakota again, where both of us are from. So we want to come home. Trying to buy a house from Louisiana, trying to finance a house from Louisiana, not an easy thing. On top of that, my wife gets a job offer. She moves home 6 months before me. We're not even in the same house, looking at houses online at night, talking on the phone, flying up. All a disaster, very stressful.
You were using Zillow, weren't you?
I was using Zillow.
My God.
I was using Zillow.
My God.
Here's the disclaimer. This is before I'm in the market, in the business. I don't know any better. I'm not talking to people at North Dakota Housing. I'm not talking to people then Joe at Cornerstone, now Benchmark.
You didn't know about bismarck.mandanhomes.com.
That's right, and that was going to be
Yeah.
the next thing. I
Okay.
did not know about that website. So, yes, I'm doing what everybody else does. I get online, I'm searching, I find things like Zillow, and being a service member, I do what all of us are trained to do. I turn to the big box store that services military members, USAA.
Yep.
So I get their 800 number, I call in, I follow the prompts, I get pre-qualified for my wife and I, and we start shopping. And again, just being separated 2 different locations, having a call center can be very, very frustrating.
I think this is one of the things that's important to note about your story. It's not different than a lot of veterans we
Right.
have in the
Absolutely.
branches. Now the Guard's a little different. We'll talk a little bit of difference maybe about Guard and
Absolutely.
and the branches. But one of the things is that folks in the you guys are so mobile. You get deployed different places. You get stationed different places. You're used to working with people on the phone.
That's right.
You take
Absolutely.
local service for granted because you never get it.
Right, and you know what? And to USA's credit, they are very great on everything that they do because they can help you in Louisiana, in Oklahoma, in Korea, in Germany, wherever you may be around the world. There's a website, there's a mobile app, there's a phone number, whatever it may be. But you're right, we didn't have that hometown experience. Walking into the bank, seeing face to face, shaking hands.
Somebody who knew Bismarck,
Exactly.
knew the realtors in Bismarck,
Right.
knew how appraisals worked in Bismarck, all that
Right.
stuff.
Now, I did get tied in with a realtor here in town that helped us. She was very patient, very helpful. Would meet with us on weekends when I'd fly up. We would look at 3-4 houses, and I'd fly home. And then at the time, 2 years ago, rates were up. Everybody was buying. And before I even landed back in Louisiana, those houses were off the market. So we'd start fresh all over again. And it just was a very stressful time. I wish we would have been able to do it locally and all start to finish, but it is what it is and was what it was, and just take it with a grain of salt. But as we're going through the process, I'm learning about mortgages and debt to income ratios and buying points, and it's new to me, but at least I had some finance background when I earned my MBA and working through those college classes, so I understood things like compounding interest and 30-year mortgages. So I think I had a leg up, but that doesn't mean everybody does. And I think you have to take that time and explain the process better. And
this can be very confusing. And I think for you to say that you had a leg up, I mean, you were a commander. I mean, how many people report to you as a commander?
I had anywhere between 60 and 70 at any given time.
So 60, 70 direct reports.
So
I mean,
you were used to taking charge.
Right.
As,
and you have to
handle the situations.
Yes. Yeah. And I want to be hands-on. I want to know exactly where I'm at every step of the way. I'm a numbers guy. I've taken the finance classes. That's the reason why I got out of the military and came into the banking world, because I enjoy that.
So for the average military member that has a tactical job and they may not be used to looking at spreadsheets and invoices and inventories and stuff like that. I mean, this thing can be a little intimidating.
It absolutely can be, and it still was, even though I had the experience I had, the classroom, the professional education, whatever it may be. It was still new to the mortgage world. We use a lot of acronyms and terms that nobody else uses, even in the financial world. It can be very daunting, and I think the problem that I had was, every time I needed to talk to my loan officer, I'd call the 800 number, I'd go through the prompts, I'd leave a message. They'd call me back, or if they said they'd call me back, I was calling them 2 days later, seeing where my phone call was at, and so we could talk about the issue.
Were you assigned a specific person at USAA?
I was.
Okay.
I was. So at least I had a name and I had an extension, but it was still.
Was this a true mortgage professional, or was it like a loan coordinator or a file coordinator?
I don't even know. I think it was a loan officer, but I'm not sure. Okay. The answer a lot was, I got to submit it to my underwriter. We'll find out. Well, let's submit it to your underwriter and find out then. I don't want to keep kicking the can down the road and finding out a week before, as I'm en route, moving back to North Dakota. All my stuff is in a box on a moving truck somewhere across country, finding out the loan is not going to close on time, is not going to, debt to income ratios aren't quality, whatever, maybe any issues, any hiccups. We had zero tolerance for error here. It was, My wife was ready to move out of her parents' place where she was living for the 6 months. I was coming up for Louisiana, and we were going to converge on this brand new house of ours. And if we were off by a day or two, it just wasn't going to work. And then 3 days later, we got hit with that huge Christmas storm. So it just
that's when you moved here. Wow,
that's when
fun.
So it just all around a very stressful time, and that's what we strive to not have happen. Using the local market, using Benchmark Mortgage, even though we are a national corporate company. You can come into Cornerstone Bank here in Bismarck and find your Benchmark representative to talk you through the process. I'll take phone calls. We take text messages. In nights and weekends, it's when they have questions, we want to answer those questions.
We got about 5 minutes before the next break. So you understand what the average service person is going through in terms of getting a home loan. What is it you do as a loan officer now differently? Let's start talking about that in this last 5 minutes of the break. We can continue that into the next segment too.
Sure.
Before we get into the things about VA home loans you want to share, but what is it you personally do different because of your experience to make it different for veterans that come to the mortgage guys in Benchmark Mortgage?
Right. So any customer, not even just VA, but any customer, of course, we want to make sure that they understand where their money is going and they understand the terms of their loan. I think that's the most important thing. I remember back when we were talking interest rates, and I know, Joe, you have a big pitch about why interest rates aren't the most important thing about your payment every month. I was quoted an interest rate, and they said, here, you can have 3.5 at 0 point origination, or you can have 3.25 at 3/8 of a point. And I had no idea what she was talking about. And there was no so what conversation, or what does that mean to me? It was, do you want 3.5 or do you want 3.25? Okay, who's going to pay that? How much does it cost? What is a 1/4 point of interest over 30 years? My wife and I like to think that we bought our forever home. We lived in 5 different houses in 4 different states in the last 10 years. We rented all of them. We finally were first-time home buyers after 10 years of marriage, 10 years of being across the country. This is our forever home. We'd like to think that we're going to be in it for 30 years, at least a long period of time. So what does that 1/4% mean to me over 20 years, 30 years? What does it mean to me every month of my payment? And who's going to pay that 3/8 of a point? Am I going to pay it? Is my seller going to pay it? Is somebody like North Dakota Housing, if we would have had that option at the time, going to pay that with their down payment assistance? So, my goal is to make sure my customers understand where their money is going, who's spending it, how it's being spent, what it means to them in their monthly budget, what it means to them in their housing payment, but also just helping them have conversations, open and honest conversations, meaningful conversations with their realtor, maybe to ask about the seller's paying, closing costs to help them get into a house, whatever it may be that will help them be less stressful in their purchase.
Will help them as the key words here. And so, like for you and I, when you were talking to the Box Store USA, and it doesn't matter if it's that or Navy Federal or whoever, would they give you an opinion? Like, what should you do?
I don't feel like I ever had an opinion. I think it was black and white. Like, here's option A or option B. Right. You want to call your wife and talk about it? We need to know in the next 10 minutes because, of course, interest rates change. Yeah. But, having a little bit more time than 10 minutes.
So it really was a loan coordinator.
I think it probably was. Looking back at it, it might have been somebody that was just putting the pieces together. Yeah.
That's one of the things that I've always tried to do in my career. It's different, I think, is I give advice.
Right, and I think that's very beneficial.
Because I'm going to see you in a grocery store. I'm going to see you at a kid's, game later or swim meet or something. And when I see you, I want, if you learn more later, like if you didn't understand what we were doing today and you learn more later, I want you to look at me and go, you gave me good advice. Yeah. You told me the right thing to do for me at the time. And I think that's one of the things that's different for you. You feel like you can tell veterans, here's my advice.
Yep. Absolutely.
And I think that holds true for a lot of local loan officers. It's business and it's future business, and you want to do that good job because I might see Grant. I might see Tim, later.
Right, absolutely.
Our kids are go to the same school or whatever.
And we can have
the box store, hey, you're the next one in line, and then there's somebody else.
Right. And this isn't meant to, be
That's
negative
how
towards
the
US.
option is.
Right. But
No.
you know, they do a lot of great things. I have a lot of my, you know, financial products with them, with my family. However, you know, local is great.
Okay.
Well-
All right. Well, we got to take a break.
Yep. Go ahead. Take us out, Dave.
All right. We're going to take a break. We'll be back with Grant on Dakota Housing Network, and we're doing a little Eric Clapton, Let It Rain.
Currently, it's 47.
Dave Ramsey is heard here. Super Talk 1270.
And it's raining outside.
Yeah.
But it's sunny in here.
Here comes the rain again from the Eurythmics. We like that song. That's
I
good.
do love that song. All right, well, we are back, and we're here with retired Captain Grant Bouley. He's a loan officer with Mortgage Guys and Benchmark Mortgage. He talking about VA home loans. Grant, you were sharing with us your story about what it was like to do what most veterans are told to do, versus what you try to now do as a local lender. For the folks who served us in the armed forces.
Did you go to? I mean, somebody recommended USAA to you, or just because?
I think it's just what's ingrained in a lot of people because they have that national coverage, the international coverage,
it's
more
kind
or
of,
less.
That's their focus and everything.
Right. You see their commercials, and it's all about serving overseas and being able to be in contact still. And
just kind of
just what it
osmosis and, like you said, ingrained that who you go to for service.
And not just USA, but like you said, Navy Federal Credit Union, or any one of those major national companies that
because they can help
cater
you
to military
when you're overseas or whatever.
Absolutely.
Probably,
right. And they do enough for the military service that they understand some of the terms and technology, whatever it may be. So,
well, you've become a local option for this, and one of the things I'm surprised is how many veterans I run into who qualify for VA home loans and they were told not to utilize the VA benefit. That really surprises me. Like all the time, I said, well, why did you do? Because like today you were quoting rates were better on VA home loans.
Yeah. By almost 0.25% in some options.
Yeah, so I mean, there's a lot of benefits. Take us through like what you see as the top benefits of the VA home loan program for veterans, so that people who are listening know that this is something. If you get that like deer in the headlights look when you ask for your VA eligibility with your loan officer, don't run to a new one.
Right.
Because it really is a great deal. Go through what you think are the top benefits.
So I think first, obviously the top benefit is just about anybody that serves in a uniform is eligible for a VA loan. So it requires only 90 days on active service in a time of war. So right now, obviously Iraq, Afghanistan, Syria, Africa, whatever it may be, 90 days in one of those countries gets you qualified for a VA home loan if you're on active duty. 6 years in the Guard, which, being in North Dakota, we have a huge Guard footprint. There's an armory just a couple miles away from us filled with potential customers that can qualify and benefit from having a VA loan. So first of all, I think that's great, is that it doesn't require 20 years to be retired in the military, have a certain pay grade or rank to be qualified. It's you can do your 2 years on active duty, do your one duty station, and come home to North Dakota and you can have a VA loan, which is the biggest benefit, I think. The 100% financing, meaning zero down payment options, can get you into a house. And you might not have a ton of money coming out of the military. You might have switching jobs, so you don't have continuance of income that a lot of conventional or FHA requires. Wants to take a look at. VA is a little bit more relaxed on that, and that can help with not having that down payment using the 100% financing option.
No, I was just going to say now, because I want to address the no money down thing, because a lot of people have been told that when you're doing no money down, that makes it a risky loan and stuff like that. But you actually service VA loans in North Dakota Housing. What's the perspective on VA home or a loan being a risky loan because you don't have money down?
Okay, our VA delinquency rates, they'll fluctuate, but nothing out of the ordinary. They're not any higher than they are for any other loan type. Other than maybe conventional loans, which are much more restrictive, obviously. And, the delinquency or the foreclosure rate is, like nil. It just doesn't, it's very rare that happens. And that's because number one, I mean, with us, obviously, you know, we want that person to keep your home. You have that VA benefit. Don't mess it up. We don't want to. We are not going to automatically just go to foreclosure. And the VA, when it gets to a point where a service member's having some difficulty, the VA will step in and say, you know, just keep working with this person, and we'll work with you on the, if we have to. But VA's on that side of things, VA is wonderful to work with from our perspective.
And so now, let's say I am getting, or maybe it's my second use on a VA home loan, and I do have equity from my last house. Can I put that money down on a VA home loan?
You can, absolutely. VA loans, so there's rules against FHA with having 2 FHA loans at any given time unless you meet certain criteria of required job transfers of this and that. You can have 2 VA loans at the same time. You can use your VA benefit 2, 3, 4 times if you're selling off the other previous houses. You're buying a house every time you move around the country. You can keep using that VA benefit. It's not a one-time deal.
What's the benefit based on? How much when you say benefit, it's a certain amount?
Right. There is a certain amount, and it's kind of a complicated equation of what you can have for down payment. But the VA follows the FEDI and Fannie Mae guidelines on loan limits for the county. So, of course, across North Dakota, not just Burley and Morton County, all across North Dakota is the same loan limit, $453,100. So anything at that or below, 0 down payment options.
Yeah.
So you can still have to pay your closing costs. So that's the disclaimer. However, tied in with the North Dakota Housing Program, get your sellers to pay for it up to 4% in seller commissions. They can help cover those closing costs, and you can get into that house.
I think that's the one thing I've heard too, is that people think because they've used it already. I've used that already, then I can't. I've already used it.
It's a one-time thing.
Like it's one, right. Like it's one bullet in the gun.
And as long as you sold that house and restored your eligibility, you can use it again at its full value. Now, if you have a house and you move and you want to retain that for rental, you may not have as much eligibility to purchase your next house without a down payment.
Yeah.
But it's still very minimal, and it has to do with how much eligibility you used on the first house and that purchase price. So every scenario is a little bit different again, and I have to sit down usually with a scratch piece of paper and do the math myself and see what they can buy on their second use or simultaneous use, I should say, without having to have a down payment.
But these funding fees are so expensive, right?
They are, yeah. Oh my gosh, 2%, up to 2.15% for a funding fee if you're coming on active duty, yeah. But you can finance those into the loan. So even though that there is an upfront fee, just like there is on an FHA, on a USDA, you can finance it into the loan. You don't have to pay it at closing. Varies between 2.15 and 3.3%, depends on active duty, guard reserves, first use, second use, all down payment. Some people want to put money down on their VA loans, 5 or 10%, get a little bit better funding fee. But the key is you can finance it into your house. So you can buy a $200,000 house and basically pay $2,200 and $155 or whatever your 2.15% on your loan is.
And one of the big things with conventional financing, of course, is that you've got to put 20% down to get to avoid mortgage insurance.
Right.
And we know, and I hope our private mortgage insurance reps are out there listening. We hate PMI. We hate PMI. But but with the VA loan, you do 100% financing, or you do less than 20% down. Is there any additional cost to that?
There isn't. That's it. There's no monthly mortgage insurance. Only that upfront fee again that you can finance it. So no mortgage insurance.
No, you can do a upfront MI deal and
on conventionals. You're right.
On a conventional, but that will likely cost you more than the VA will. Correct.
Right. So on a conventional, if you want to do an upfront MI, you're going to pay for it in an interest rate or some other type of fee somewhere.
You're
right.
paying, and the MI company to pay that, they probably charge you. It's over 3%, I believe.
Yeah, again, credit scores and loan amounts and right, absolutely.
But it's likely more than the 2.5.
Right, you're going to pay for it some way. Either you're going to pay for it out of pocket, or you're going to pay for it in.
Plus, you got to have the down payment.
Plus, you have
minimum
the down payment.
Minimum
right.
3%.
Absolutely. So on the VA, again, that's the benefit is 100% financing, upfront funding fees, financing the loan,
and then
no monthly MI.
Compare that to an FHA loan where you got to have the 3.5% down payment plus you're paying upfront. Similar cost, $185, and then you have a monthly premium on top of that at what is that now? A half?
On the
0.85.
0.85, yeah.
0.85, right.
So you've got to factor that in. FHA definitely more expensive than the VA.
And FHA is still a great option for those that don't have that VA benefit. However, VA, I
can get VA or not. You weigh that against the other options.
Sure. Yeah. And I think that's where some people decide not to use VA is maybe they have a bad taste for the government or the VA that they've had to deal on the medical side or other benefits or whatever it may be in their life that they think doing a VA loan is going to be the same hassle. And it's not. It's conducting a VA loan is the same conventional FHA, VA. They're relatively, little minor things here and there, but nothing that is.
We have to get your daycare expense if you have that.
Right. So they add a little bit of liabilities. There's nearest living relative comments, but nothing out of the ordinary.
Is it worth? So if you have a $300,000 loan, you're going to keep at least, if you had to put 3% down on any other option, you're going to keep at least $9,000 in your pocket. Yeah. Is giving us a couple pieces more information worth $9,000?
Absolutely, I would think so. Right.
And I don't know, but
even you got to remember though, on that 3% option, you're going to run into loan limits. You're going to run into income limits for counties. There isn't that in VA.
Stricter credit scores.
Stricter credit, absolutely.
The underwriting is different, conventional to VA.
Absolutely.
VA is there to help the veteran.
Yeah, it doesn't matter if you're a neurosurgeon that served.
Right. Or the youngest private making, right. Absolutely. Everybody's benefit is everybody's benefit.
All right, well, we're going into the break here. Go ahead and Dave, take us out.
Who stopped the rain, says Creedence Clearwater Revival.
Currently, it's 47.
Weekends with Twilight Zone Radio on SuperTalk 1270.
And welcome back to Dakota Housing Network here with Dave Flohr and Grant Bouley talking about VA home loans. And Grant, you were going through some of the things that the benefits, ways that the VA home loan program is a great option for people who've served our country. You're going to talk about a couple things that people need to be aware of, though.
Right, yeah. So, when you look at conventional FHA, VA, even USDA, I think everybody shies away from VA because they think it's this huge hurdle to get approved or to go through the process, other criteria that the underwriters or the VA puts on them. And they're essentially the same products. Yes, like we said, there's little things here and there. The one thing I wanted to mention before the break was residual income. That is one of the big things that's unique to the VA, that after your housing payment, this is different than your DTI, your debt-to-income ratio of being approved. You have to have so much left in your paycheck. So if you get paid $2,000 every month, after you pay your mortgage payment and your bills and your housing, whatever it may be, you have to have a certain amount of money left in that paycheck for the VA to feel comfortable with being a little bit more lenient in most things that they do for that loan.
So the VA essentially takes one more step beyond other loans to make sure you really can afford the payment.
Right, absolutely. And it's based on family size and, again, the region of the country you're in. I've never had an issue. I think you said you had one issue on it. So it's not like a very strict guideline. It's just a reassurance to the VA that you're getting into an affordable housing program.
And you have some money left over at the end of the month in case something happens.
Absolutely. You're not buying a house, too much house.
Yeah.
It's try to prevent folks from making a decision that makes them house poor.
Yeah. And as you just said, that's VA's counteract to the 100% financing.
Right. Being lenient on other things.
Yeah.
Right.
Yeah.
I mean, you can do a 100% financing with a 605 credit score, which is unheard of in any other loan programs. I mean, having a 605 credit score in any other loan program is usually a nail in the coffin.
Yeah. So if as a result of your service or life situation, you've had a bump or bruise, it doesn't mean you can't use your VA eligibility.
Absolutely.
In fact, we've done them before where there's been past foreclosures.
Yep. Bankruptcies, foreclosures, collections. Again, like just they're lenient as long as we can prove that it was a one-time, and as long as you're out of
as long as your eligibility is restored,
right, and you're out of the certain window of past time, the 2, 3, 5 years, whatever it may be. It's not foreclosed last May, and I want to buy this this fall.
And one thing as a veteran, maybe VA's got some bad press and a bad rep on other areas, but this is one place I think they do get things right.
I agree.
They do a good
I absolutely
job.
agree. Right.
Yep.
And you really got to be careful, I think, nowadays because nationwide, purchases are down. It's harder to qualify. So a lot of talk is our lender's going to start softening up their criteria, and you can get you're going to get if you start talking to people, you're going to say, well, no, this would be a better option. This would be a better option versus I'm a veteran. I have this benefit. I should use this.
Right.
The VA loan.
Yep.
I really do.
I can't think of an instant where you wouldn't want to use your VA.
Yeah.
Unless you were really, truly looking for a lower payment because you had $40,000 or 40% from a equity in the last house to put down. But even then, why not use it? Because you might still get a better interest rate than on the conventional side.
Well, one area
absolutely. Conventional. It's going to be a lower rate.
Right.
Yeah.
It's going to be the same loan process. Again, 1 or 2 extra forms, no big deal. Even if you have the money, why don't you go for the lower interest rate and just put yourself in a VA?
So then run that rate. Then if that's what it comes down to is run the rate. Okay, conventional's 5 and the VA is 4.5.
Right.
Okay, what's that save me over 10, 20, 30 years?
And all I have to do is provide you. I'm going to find your certificate of eligibility. But you don't have to provide me anything more.
Yeah. The one thing where I see some issues is people when they get over that limit. So when you go over the 453, is it 453?
Oh, sure.
Yeah, 453, 100 is.
So some markets it's tough.
So what will happen is people will go, oh, I don't. Now I need. So then what will happen too is then they get offered jumbo financing, and because once you get over that limit, then jumbo financing's tighter, and depending on that's totally private market stuff, and so it's the rates really vary on those. But if you're a veteran, VA has something called the high balance loan, which is basically a jumbo VA loan. Okay. So even if you're going in shopping in that higher price range, if you've gotten out of service and you have good pay and you're buying a little nicer house and the average bear out here, that doesn't mean you can't use your VA benefit. Now you might still have to put money down, but it still won't be 20 or 25% like you have to do on a regular VA.
Right. Yeah. And you got to remember that 453-100, that's a county loan limit. So you're not going to find that in San Francisco. Their county loan limits might be $600, $700, $800 or $1,000 for
the high
loan. Right.
Fannie and Freddie've got the high cost areas.
Exactly.
Right.
So,
but even here,
all of North Dakota is 453.
So the surgeon that's served shouldn't discount getting a VA loan just because I'm looking for a $500,000 loan on my house.
And it's what it is it's 25% of the difference. So let's make matters easy. If you find a house for $553,100, so $100,000 over that loan limit, you're going to put a $25,000 down payment on a $550,000 house. I mean,
where else are you going to get that deal?
Yeah.
Right. I mean, that's 5%, maybe a little less, plus or minus. So versus a 20% down payment, 25 maybe on a jumbo pricing.
Sure.
And so it's still a really great option if you find yourself in that higher end market across North Dakota.
Well, tell us VA home loans. There's a couple odd things about them. Tell us the strange but true, what you wouldn't know, what you wouldn't expect about VA home loans.
So appraisals. Everybody's afraid of VA appraisals.
I shudder.
Right, and I don't know why.
I don't know why.
First of all, there's a max amount that they can be charged for a VA appraisal, again, to protect the service member from hope no appraisers are out there, but gouging prices or whatever it may be. If your appraisal comes in low, VA has a one-time reconsideration of value where you don't have to go to your underwriter and explain with a bunch of comps. You can actually file through the VA for an official reconsideration. You still might have to have your realtors help find comps in the area to why that value should be higher, but it's an official appeals process through the VA and not the loan officer and your customers just fighting the other side of the table.
So if I'm a seller and I have two offers that are exactly the same and one is conventional financing and one is VA financing, as a seller, the tiebreaker could be I know there's an appraisal appeal process on the VA
right.
offer.
Sellers should not be afraid of a customer coming in there.
That's
They
where
buy.
realtors need to know that.
Right. Yes. Yeah.
There is that.
That's
There is
right.
that if they're afraid that an appraisal might come in low because it's a rural property or it's a unique house in a specific neighborhood, still go forward with that VA because you can apply for reconsideration of value.
Strange but true one.
All right.
Don't be afraid of VA appraisals. Strange but true two.
So we talked about who's eligible for VA loans. Service members that have served on active duty for a minimum of 90 to 180 days, depends on wartime, peacetime. Guard members for 6 years if there's no active duty. Now, if you have a guard member that gets activated to go to Iraq, Afghanistan, wherever it may be, they'd automatically qualify if they didn't have that 6-year mark in the guard. You know, the VA wants to help all service members, even unfortunately they gave that ultimate sacrifice. So if you have a surviving spouse, as it said, of a service member that was killed in the line of duty or from a service-related injury, that spouse is eligible to use his or her spouse's VA benefit, you know, after they move on and find a house and do whatever they do with the rest of their life. They can benefit from that VA benefit, which is great.
That's certainly not strange. That's true and terrific.
Yeah,
actually.
useful.
Absolutely right. Very useful. You know,
Yeah.
it's,
That's true and terrific.
especially in the world we're living right now with Iraq, Afghanistan. There's a lot of those surviving spouses out there. Unfortunately, they are benefiting from that.
1 minute, something else you don't know about VA home loans.
Loans are
Strange but true.
assumable.
There you go.
So VA loans are assumable. So if you have a customer that wants to pick up where you left off on your VA loan and they're not in the military, they can still assume it if they meet underwriting guidelines and everything. But a VA loan is assumable
By a non-veteran.
by a non-veteran. Exactly.
That's strange and true.
Right.
Yeah. Okay.
So if you had a VA loan
I
from
wouldn't have
3-4 years
expected
ago when rates were really low and now they're up higher, but somebody wants to assume your VA low rate loan, there you go.
It's a good selling point.
Very good selling point.
Trying to sell your house.
If you're trying to sell your house, absolutely.
30 seconds, one more.
One more. I would say the appraisal list. Again, we don't control the VA appraisals for VA loans. We do at Benchmark for our conventional FHA. They come out of St. Paul, Minneapolis, St. Paul, but that doesn't mean that they're not knowledgeable in VA loans. They have to apply to get on that appraisal list.
They're
so again,
local.
They're local. They know the market still. Just another tip for realtors not to be afraid of that VA appraisal.
Any shortage of appraisers who will do VAs?
Joe, I'm going to let you handle that as a board member.
Time frame has been a little bit longer on them, but still under 20 days now.
Okay.
So it's supposed to be 14 is the ideal. But the cool thing, the other strange truth I'll throw in is if the appraisal comes in higher than the loan amount you're applying for,
Yeah.
you can actually use the difference to actually pay off debt when you're buying your house.
Well, that's strange but true
That's
also.
a cool thing.
Almost like taking a home equity loan
it's like
in
a-
conjunction with your...
It's like a home equity plus deal. Yep.
All right.
So, all right. Well, thank you for tuning in, Grant.
Thanks,
thank you
Grant.
for coming
Thanks
on.
for having
talking
me.
about VA home loans, and we'll be back next week with
Dodd-Frank.
not Frank Dodd.
Because not Frank Dodd.
Dodd-Frank.
Dodd-Frank, our friend, talking parade of homes next week.